What if I told you that 99% of Warren Buffett's $100 billion fortune came after he turned 50? Yeah. The Oracle of Omaha didn't get rich quick. He got rich smart. And he did it using a system that's so simple, most people overlook it completely. In this video, you'll learn how to think, invest, and behave like Warren Buffett, so you can build real wealth without needing insider info, a finance degree, or $1 million salary. This is Wealth Wisdom Daily, bringing you the best tips and tools for reaching financial freedom through stock market investing. Takeaway 1. Start early. And never stop. Warren Buffett made his first investment at age 11, and he still thinks he started too late. Why? Because of this magical force, compound interest. Let's say you invest $5,000 a year from the age of 20 to 30. Then you stop. Meanwhile, your friend starts at 30, invests $5,000 a year until 60. Guess who ends up with more money? You do. Even though you only invested for 10 years versus their 30. Why? Because your money had more time to grow. Buffett calls compounding the eighth wonder of the world. And his real genius wasn't finding the best stocks. It was sticking with good ones for decades. The longer the runway, the bigger the snowball. Takeaway 2. Buy great businesses at fair prices. Most people treat the stock market like a casino. Buffett? He treats it like a grocery store. He waits for discounts and loads up on the essentials. Instead of asking, will this stock go up next week? Buffett asks, would I be happy owning this company if the stock market shut down for 10 years? That's because he sees stocks as businesses, not lottery tickets. When the world was panicking in 2008, Buffett invested billions in companies like Goldman Sachs and Bank of America. Why? Because while the headlines screamed collapse, Buffett saw value hiding underneath the fear. So next time the market dips 20%, don't scream, go shopping. Takeaway 3. Be fearful when others are greedy. This might be Buffett's most quoted line. Be fearful when others are greedy, and greedy when others are fearful. Translation: don't follow the herd, because the herd usually runs off a cliff. Think back to the dot-com bubble, or crypto in 2021. Everyone was hyped, and most lost their shirts. Buffett? He avoided what he didn't understand. He said no a lot more than he said yes. That's the secret to his wealth. Discipline, not just brilliance. Investing isn't about chasing trends. It's about staying rational when others lose their minds. Takeaway 4. Invest in what you understand. Buffett never touched Bitcoin. He doesn't mess with flashy tech he can't explain. He built his empire on boring stuff: insurance, railroads, Coca-Cola. But here's the thing, boring makes money. He once said, never invest in a business you can't understand. That means skipping hyped-up stocks your cousin keeps shilling on Instagram, and focusing on companies you'd feel confident owning, even if the internet disappeared tomorrow. If your portfolio sounds like the snack aisle at a gas station, Pepsi, Kraft, Dairy Queen, you might be onto something. Takeaway 5. Patience pays off. Buffett has held some of his best investments, like Coca-Cola, for over 30 years. During that time, he didn't panic sell when markets crashed. He didn't jump ship when something new and shiny came along. He held and watched the dividends roll in. Investing isn't a sprint. It's not even a marathon. It's a lifetime habit. The average investor panics at every dip and switches strategies constantly. Buffett just stays the course. He once said, the stock market is a device for transferring money from the impatient to the patient. So, which one do you want to be? To sum it up, start early. Buy great businesses. Stay calm when others freak out. Invest in what you understand. And let time do the heavy lifting. That's Warren Buffett's real secret. And now it can be yours too. If you want to dive deeper into Buffett's mindset, check out my next video on The Intelligent Investor. The book he says is the best on investing ever written. Cheers.